weekly recap of the day trading, the market conditions, the lack of discipline I have been basically not exhibiting much of this week, and kind of just some thoughts about like what's next, where are things going. So first things first, okay. This past week, I took 3 back-to-back red days. So I said, that's it. I'm done trading for the week. So Thursday I walked away, didn't look at the charts. What did I do today? I decided to take a random day trade in my Robinhood account. And normally I day trade from my Thinkorswim account. So I'm sitting at the desk and I'm, all professional and whatnot. And after Wednesday, I said, I'm done day trading for the week because I've had these 3 red days. That's my rule. So I broke the rule on Friday, today, and I'm just like, and I took a small loss, of course. So I lost, because I'm just trading very small position sizes in my Thinkorswim account. I'm trading 2 shares per actual trade to keep losses small while I learn what the heck I'm doing. And I had lost about $11 over those 3 days. That was my negative P&L for the week. Nothing crazy, but the rule was, okay, walk away. And so then today I take this random trade outside of my normal parameters on a different platform, and I take an $11 loss. And I'm like, really? Like I had to double like the loss I already had for the week. And I think there was just this addiction part of me that was like, I gotta play in the market today. I'm looking for a bounce on this one stock. And it just never went my way. I was up for a smidgen of time in profit, very small profit, and then the rest of the day it was just down. And so what I think is going to happen, this is something I've read about repeatedly. So like if Friday is a bad day, the markets sell off, if we close negative on the day for S&P 500, NASDAQ, then typically Monday is what they call a fade day. It's going to be down again. So I'm like, okay, that's fine. It's funny too, because I took a day trade in my IRA account today as well. And that one I actually made money on, very small amount on Broadcom. But I thought, maybe I should hold it. And I was like, no, I'm not holding nothing over the weekend. like I'm out. So I made like a $8 profit on Broadcom in my IRA. I only bought like 5 shares. But, I'm looking ahead as to maybe that one gets a bounce for a swing trade for next week. I do swing trading and day trading. And hey, what's going on? Swiffy, if I'm saying that right. And so, yeah, so back to the way this week went, though. I started, let me think, last Thursday, not this past Thursday, but the one before, I started a new experiment of these 20 trades experiments I'm doing. And it's like, I really should have took a break from one 20 trades experiment to the next because I was kind of feeling a little bit of burnout. And I'm like, I did really well in the first series of experimenting with 1 share per trade. Thank you, Saf. And I had a great win rate and I was profitable. And then as soon as I start the second series of 20 trades, which I learned from Mark Douglas, by the way, that wrote The Disciplined Trader and Trading in the Zone. He's got some great videos on YouTube. Check them out. And he talked about these 20 trades that you do in a series. And it's like the second time I did the series, I started trading 2 shares. And it's not a big jump from 1 to 2 shares, right? But I think I was running up against just a little bit of tiredness and burnout. And I think that affected my initial start of this 20 trades where I'm now buying 2 shares per trade. Because I've had a horrible win rate. I think I've maybe had 2 green trades out of like 14. And I'm obviously in the negative. And this week I had 3 back-to-back red days, Monday, Tuesday, Wednesday. Because I'm only trading 2 shares, this is not crazy, right? I was at a loss of like $11 for the week. And I said, okay, that means, according to my rules, that I walk away for the week. I'm done. No Thursday, no Friday. And then, because I'm like, bored on Friday, I decide to take a day trade in my Robinhood account and I lose $11 more. So I'm like, okay, Amy, you need to reset over the weekend, get back on track, and just try again. So And throw unit, what's up? How long have you been trading? Like, when did you start? So this is month 4 for me. I took maybe, I don't know, a handful of trades in November. So I don't really count November. I was mostly doing swing trading then. Then in December is when I was like, ooh, I want to do day trading, you know? So December, January, February, month 4, March. And I started learning from just YouTube and books. I've got, a good chunk of, I think, like, some pretty good people to follow. I started learning from, what's his name, Stan Weinstein, who wrote the book How to Profit in Bull or Bear Markets. Now, granted, he's more of a swing trader, but the idea of shorting, like, I was foreign to that. I was an investor in stock market before. I was like, oh, you can short things. And I realized I could do it by buying ETFs that are bearish, basically, like bearish on the Mag 7 stocks, Tesla, Google, Microsoft, Amazon, all those kind of things. So, yep. What's up, two sisters? So how did you guys do for the week? Like, what were your results? Was anybody profitable on the week? Because I'm just like, yay for anybody who came through these markets on a win. It was a challenging week. And I think back and I'm like, I was maybe trying too hard sometimes to go long on stuff. And I probably would have had a better rate of wins if I had just shorted things, most things. And, there was a couple of shorts on Tesla with TSLQ ETF that I got stopped out on and I had a small loss. But I think overall that would have been the better game plan this week because it just was ugly. Like, I could have actually, if I was supposed to trade today, I wasn't supposed to trade today, but I did, and I lost money. But if I was actually supposed to and I had a plan, I would have shorted with like SOXS, which is the ETF that shorts the semiconductor niche, or I could have shorted with SPXU, which shorts the S&P 500. I'm thinking, it's always after the fact. It seems so easy. Like, yeah, I could have shorted the S&P, I could have shorted the QQQ with SQQQ. And all this is in hindsight. But if you started the day and all you saw was the market's bleeding, it's like, okay, pick a lane and go with it. And, I tried to go long on something and it never happened. Anthony, how much capital did you start with? That's a good question. I think initially, because the day trading account I use mostly is Thinkorswim with Schwab, and I had investments that I slowly like cashed out and took profits, earlier a couple months back when it was a bull market, took profits and I had some cash flow in there. I think with the day trading, I had like initially 8 to 10,000 in there, and I was buying like, in a day, I would maybe buy like 4,000 or 5,000 worth of stock, and I got to the point where I was like, okay, we're gonna backtrack here because I'm putting myself at too much risk. I don't have enough background, practice, experiment, behind what I'm doing in order to justify doing these larger trades. So that's when I decided to go back to the basics and just trade with the one share. So I think at that time, I had about 10 grand in the account, and I was like, no. I'm taking like half of that out of here, and I do my high yield savings account just for security measures, and like, I'm only trading very small positions, and I might take between 2 and 4 trades a day. So I don't need $10,000 in that account. 5,000 is more than enough where I don't have to worry about using the money that's not settled, because I'm just in a cash account. What's up, Blob? OF. What is OF? I don't know what that means. What did, if y'all are day trading, what did you start your account with? I'm curious. Don't trade stocks, start an OF with your girlfriend. I don't even know where you're going, dude. You're confusing the hell out of me. So that's, mistakes were made this week. I was so disciplined the last 2 weeks. I was trading with one share. It was practice mode almost, and I didn't care what was happening. So it was like not putting all this pressure on myself. And I think starting this second batch of 20 trades in a series, I was putting pressure on myself because I had data from the first set and like, oh, I did so great, I need to keep that going, right? And when you care too much and you're worried about keeping up with yourself, it's really, we're just competing with ourselves, right? I think it puts a lot of pressure on your trading. And I think that's what happened for me. Michael says bias was short today on the higher time frame. Yeah, you should wait for price to hit your levels, only trading in the direction of your bias. Yeah, and I kind of did this random trade today that I shouldn't have did because it was sort of on a whim and a tip, and I'm like, okay, yeah, you gotta take it with a grain of salt. I was okay losing money, but it was just like, wait, I'm not even supposed to be day trading today. I was okay swing trading, but I just was like, why am I even in this trade? I just was hopeful to catch something, and I think that was kind of my sentiment all week was like, can I get a winner? I think this week, what did I trade? Let me see how many actual trades I did. I do remember I only got 2 winning trades this week out of 3 days, which technically 4 days. And I had 1, 2, 3, 4, 5, 6. Okay, these ones were winners. 7. Yeah, I had like freaking 8 losses and like 2 wins. So not great for the confidence. And yet, I don't necessarily feel like I would have felt weeks prior when it used to bother me to lose money. And now it's like, okay, I'm trading small, so if I lose money, it's not very much money, yay. But I'm starting to feel less attached to the money too, which is great. Like if you can get to that point where you're like not concerned about the money, I think that's when you start to perceive your strategy better, you start to think more clearly, and you start to get better, at your setups. And this week, I think it was like emotional stuff coming up. Just, competition with myself, trying to do better than I did before, or keep pace with the trading I did before. Because I went 70%, 71% win rate on the previous 20 trades. And, the market was still volatile and things. I can't say, oh, it's the market, I think I just was in a different place mentally. And then this past week and ending in last week, it was like I'm trying to prove to myself like I can do it, and I'm taking trades with FOMO a little bit. It's like before I started trading with small positions, it was this fear of getting in because it's like, oh shoot, what if I'm wrong? This fear of being wrong, fear of losing money. And I felt like I got past all that, It's like, okay, cool. Like I'm not hesitant to pull the trigger to buy. I'm getting in the trade. Woohoo. Now it's becoming like I don't want to say I'm in a hurry to get in. It's more like I'm not waiting for the setup to come to me sometimes. Thank you, Michael. Says, love the channel. You're doing great. Yeah, see you later. I'm not waiting, or I'm chasing, if something's surging. It happened at least once, one specific time this week where I got in SMCI, went long on SMCI, and I'm literally putting the order in, kind of like, oh, is it getting near the top here? And the stupid thing surged like an extra 20 cents as I'm putting the order through. So instead of getting in at like 38.60 or something, I got in at like 38.80, like in that half a second of clicking send. And it was just, some of those things where it's like, wait and look at your indicators. And this week was actually a learning experience for me with indicators. So I made some changes. Previously, my indicators consisted of the 9-day EMA line, I think I had the 20 MA on my chart because I'm usually on the 5-minute chart. And then I had the MACD. I think that was pretty much it. And I watch price action and just try to, find my levels before I get into stuff. And I decided to do some research and like figure different things. I'm like, let's try some different tools, So I ended up completely eliminating the MACD, which I didn't know until I started researching with ChatGPT, that it's laggy. And it's, kind of showing you things after the fact, and after the fact so much so that you're almost missing the move, right? So I started adding to my chart the stochastic oscillator. And this one moves more, I don't want to say real time, but it's closer to real time. And it's similar to what the MACD does, got the two lines that cross. And I actually just really used it to watch the charts this week when I wasn't in a trade and was like, okay, like I kind of see how this one works and kind of gives, indicators of like, oh, it's an overbought or oversold because there's numbers down there. And ChatGPT again was like, hey, actually it made me a nice PDF, which I printed out to keep my thing here, and it called it Stochastic Reversal Playbook. And it says Scalper Edition. So it put all this stuff in here for me to study and to go back to. And now when I'm in a trade, I can be like, okay, what zone am I in, What's up, Team Wildboar? I had my second green day in a row today. Woohoo! Did you short? Because it seemed like that was the way to go today. It was just short stuff. Don't go long on anything. Yeah, so this thing, and it even gave me a checklist. Okay, so if you use the stochastic oscillator, it says you want to price confirm that the candle pattern or key level holds, and then you want to see that the volume matches. Is it, as it's moving the little lines, right? Is the volume in step with that? And that's something I had forgotten to check when I was jumping into trades. It was like, oh yeah, volume, duh. Like sometimes you see a stock move very quickly and goes up in price, but if the volume was weak on that candle, what does that mean? It's not going to stay there for long, right? You're going to basically miss the move by the time you actually put your order in. It's going to go against you. And then it says, 9 EMA, you can put that on there, have that as optional. And it says support or resistance confirmed. So when you use the stochastic oscillator, like basically also use the 9 EMA. And something I noticed this week, whether I was in a winning or losing trade, was that the 9 EMA was repeatedly getting tested on all the stocks I was trading or watching. And it was like, if it couldn't get past the 9 EMA, like 99% of the time that stock was going back down. So I watched Tesla. I stood on the sidelines at the end of the day on Wednesday. I watched Tesla, and chat had, given me these information about the stochastic, and I'm watching the lines, and it hit it once and rejected the 9 EMA. And then, and this is, by the way, just before the close, and then it went up, and it was like really close. I think I was looking at the 5-minute candle there. It was kind of just hovering over the 9. I'm like, okay, chat said, wait for it, the candle to close, which is another impatience thing I don't always do. And I saw the candle close, and it was above. Because chat was like, if it rejects it twice, then again, chances are, probabilities are, it's going back down. It didn't. It crossed over. And I said, I'm asking chat as I'm like watching the chart, like, does this mean you get in here? And it's like, yes, go long. This is a bullish signal. And of course, the stochastic was pointed upward by that point. So you got your two lines, both pointing up. And the next obvious confirmation was when the signal line crossed, pointing up. And then chat was like, yeah, that's your confirmation, like for sure. Now you've got multiple confirmations, jump in your trade. So, it's just kind of helpful to use it like in real time, asking questions. I did try to use, I don't know if you guys have used the ChatGPT AI voice assistant. I tried to get it to talk to me with real-time data, and it wasn't able to search anything. It's like, yeah, you can talk to it back and forth, like verbally, but it can't internet search, which I find kind of like silly because it's like, hello, you have a text box where you can click the little globe and you can internet search and you can get data from like Yahoo Finance, right? So I don't know if they're working on behind the scenes maybe something for this other thing this assistant to be able to do that, because it would be really helpful. So if you're listening, ChatGPT, really helpful if you can make it real time. And it was for a while there too, you'd ask it for, data and ask it to pull quotes and things like that just in the text box. And it would be like, oh, I don't have access to that. And I'm like, yeah, you do. I've asked you this before. And then it's like, oh, okay. And then it would search. And I'm like, so half the time it works, half the time it doesn't. But the stuff is getting better, y'all. I use it sometimes in the morning in the pre-market to get ready for my trading day. I'll pick 1 or 2 stocks, usually Tesla is one of the 2. And I'll say like, hey, what are day trading levels, for today? Like intraday, give me specific levels of support and resistance. what was the close yesterday? What's the pre-market high? What's the pre-market low? And it's actually been really good in terms of giving specifics. Like it's not like, oh, 290, 295, 300. It's like 290, 12, 291, 78. It's giving like specific areas. And I'm like, okay, this is getting better and it's more helping my trading. Not that you would want to be reliant, of course, on it, but it's just one of those things that saves you time when you're doing research in the morning, which is another thing I was slacking off this week. And I'm like, yeah, it shows when your days are red, right? It's like if you aren't putting in the time to watch your stuff in the pre-market or prepare for the day before you actually start trading. I was like sleeping in, all kinds of bad habits this week. Discipline across the board was not there. So that's on me. Short as always, buying at 58, sold at 69 with 500 shares. Nice. Got out just in time to see it drop off the edge. I almost didn't even trade today. Yeah, have a good weekend too. That's great. That's going to be my game plan, I think, going into next week is like, what can I short? I mentioned some ETFs a few minutes back about like the ones that you can basically go short, but you're going long with the ETF. So there's SOXS, which is semiconductors. You're shorting semiconductors. There is SPXU. You're shorting the S&P. There's SQQQ, shorting the QQQ. And there was another one I was looking at. Oh, you can short the Dow. I think it's like SDOW, something like that. I have all these saved on my phone, of course, which I'm using and can't pull up. So, but yeah, anybody have some wins besides Team Wild Boar? It's encouraging just hearing other people's successes because it's like, okay, somebody out there is making money. It's not a broken system. It's not just, that there's only one side to the market right now and everybody's losing. No. I think whether the market is red or green, it doesn't matter as long as it's moving. If it's sideways, that's the worst, right? When you have those kind of flat days, it's like, where's the trading opportunity? And I don't think there's been many of those lately. I do feel like, most days there's some momentum. It's just gotten like trickier to find the time of day of the momentum. Like sometimes the opening bell, the first 10 or 15 minutes, things have been really choppy. And I don't know if you've noticed this, but like things have been extremely choppy, aside from today. But, where you're trying to figure out, okay, which direction does the market want to go? And the pre-market data is not necessarily helpful at all. It could be completely opposite. Like, a stock could be totally green, have new pre-market highs, and then just takes a dump at the open. It's like, okay. Or it could be the other way where the stock looks red and negative and then has a random surge, at 30 minutes after the open. It's all over the place. So for me, for Monday, starting with a clean slate, gonna clear the head over the weekend and just think fresh. I've got 6 more trades of my 20 trades experiment where I'm buying 2 shares per trade. And I just want to focus on each trade individually, not worry about, my stats that I've gotten so far, not worry about, okay, I got to try to end on green. None of that. Just each trade, one good trade. Mike Bellafiore, he's got a channel, I think SBM Capital. He has a book too. It's called One Good Trade. And the concept is just focus on that one trade. Like, don't worry about your other trades. Don't worry about the ones ahead. You focus in the moment. And I think it's easier said than done because a lot of times you are thinking all kinds of things when you're in the trade. And psychologically, yeah, that's what's going to happen because your emotions are running hot. Every time I get in a trade, I'm trying to practice too, just 1, mindfulness, focusing on the trade in the moment. 2, checking my emotional thermometer. Like, am I really excited? Is like my heart pounding when I get into this trade? Am I overconfident, feeling like, oh yeah, I'm gonna make money on this one? And sort of like taking note of that in my trading journal because I think it's important to realize if I am over emotional in any way, whether it's a good feeling or a bad feeling, the gut feeling, the pit in your stomach, if I'm over emotional in any way across the spectrum, instead of neutral, then that could mess up my trade. It's whether it's a good feeling or a bad feeling. I think anytime you're overexcited or you're feeling kind of negative, like I think really the goal for me is to get into that balance point, peace of mind, where I don't care. I don't freaking care. Like the trade works, awesome. If it doesn't, okay. Like there's no life or death situations here, right? This is trading, not battle. Although it might feel like a battle, you can't compare it to war. Like we're not on this battlefield, fighting each other. It's all up here, really. I mean, the feelings you go through when you get into the trade, whether you think, yeah, I made a great decision, I got in at the right time, the right price, perfect entry, or somebody across the continent, is like, oh, I don't know, I got in this trade, and I don't know if it's going to work out, and like, oh crap, I should have waited, and it's going against me a little bit. Panic, sell, Whereas somebody could be in the exact same trade at the exact same price and be thinking an entirely different way, totally calm, totally neutral. Yeah, I got my stop loss. It's all good. If it works, works. If it doesn't, I ain't gonna lose too much, So I think it's funny how we're perceiving. Everybody has a different perception of the trade. Whether the facts are the facts, of like entry at X price with X amount of shares. Of course, they could have different stops, but everybody's got to have a risk tolerance that makes sense. And I just think we overemphasize these thoughts of like kicking ourselves, and I find myself like beating myself up repeatedly. And I said, you know what? This week I didn't perform at my best. I know what I'm going to work on for next week, and what's done is done. Like there's no more berating, no more like shame on me, breaking rules, whatever. Acknowledge it, set a plan, recommit, move forward, right? There's no sense in rehashing over and over again what you did or didn't do wrong or right. It's all about, okay, where am I at right now? Where do I want to go? Like, I'm here, what's ahead? That's all you got to focus on. Because if you stay in the past, first of all, you probably end up repeating the same mistakes. Second of all, you can't grow, It's like, I think mistakes, or I call them just decisions you made that maybe didn't work out as you expected, you just acknowledge it. You're like, okay, well, what can I work on next? And I know for me, the discipline. Got to work on the discipline next week. Got to just work on the emotional control. If I feel those feelings come up where I'm about to get in a trade and I'm like, and the heart's like, don't get in it. Something is subconsciously telling you that, one, you're not in the right mind frame. Two, you're probably going to do something stupid. Even if you got in it at the exact perfect time, when you're in that state of mind, that feeling, you will probably either A, take profits super early, miss out on a move, or B, you'll panic and, sell when it goes against you slightly. And I've even had it happen where I just bail on a trade because I'm like, it's too close to my stop loss, I'm out, Instead of just letting it sometimes. And yet there are occasions where this past week, I definitely knew the trade was going against me. And I'm sitting there, waiting and hoping. I know, you know what I'm talking about. Like, you're like, oh, come on, turn around. And you're wrong. And at that point, like I've told myself, and it's now part of my rules, that I've got a 3-strike rule. And if it's going against me, that's, part of the strike is the price. Then 2, if it's hitting a technical level and it's not breaking through, or vice versa, if it's hitting the support and breaking through and I'm going long, for example, that's number 2. And then number 3, I was looking at the MACD as my indicator of like, get out. And now I'm like, oh, the stochastic oscillator is a better signal for me to follow. So that'll be my replacement for that strike 3 rule. And, this past week, I had these 3 strikes written out. I think I did it by like Monday. And it was one day after that, Tuesday or Wednesday, where I didn't follow it at all. It's like, it's going against you. You got the gut feeling, and you're like deer in headlights. Your analysis paralysis has overcome. And at that point, you got to just realize that There's no amount of logic coming in to save you because you're stuck in this emotional state that's going against you. And you have to just go back to your discipline, because here's where discipline actually works is if you are following your rules and you're staying with your discipline, you will know, okay, and I'm going to have it like right on the desk with my rules. You will know if X situation happens, regardless of how I feel in that moment, like, please, 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 then I need to get out. Like, there's no, let's sit and wait and maybe, just maybe. No, the rules are the rules, right? So you have to just really, I think, in times of heightened emotions, having something physical next to you, which I didn't have this week. I had my journal, like my cheap little spiral notebook journal here, on the desk at all times because I am actually recording my trades in real time. But I didn't have the rules right there. And I don't have to flip back, find my rules. Okay, what was my rule again? You're not going to do that, right, in the middle of it. So just keep this in mind, in front of your head, like, okay, got to have something physical. If you're in the situation like I am, where you're slacking a little, your mental discipline isn't there, you're getting emotions in the way. What really helped me, though, these last couple of weeks, even though this week was red, I think I was at a small loss, very small loss last week. What's really helped me to not take it so personally and not worry about the money is to have a different position size. So initially I was buying 1 share per trade, which in of itself takes discipline because I'm like, no, I want to buy more, you know. I said like, no, we're going back to the basics here. If you can trade well with 1 share, you can then double it. And then when you trade well with 2 shares, you can then double it. And so this is my plan as I work my way back up with building my confidence, making sure that, okay, if I trade well in small position sizes, that means it will be that much easier for me to trade bigger position sizes. So in the beginning of my day trading journey, back in December, I didn't think like this. It was a different market. It was a lot easier to make profits on day trading, but I was taking full position sizes of where I felt comfortable. And when I started taking some losses, I was like, ooh, this is not comfortable, right? It's like, okay, you have some wins, great, but if you're losing the same amount you're winning or more, it's not great, you know? So this is why I started from scratch, and you can see all the videos on my channel, like basically back to basics, you know? The 20 trades experiment, thank you, Mark Douglas. He brought this up in, I want to say it was like the Winning Traders series, or it's called something like that on YouTube, and there's 4 parts. And somebody on the channel recommended in the comments, like, hey, Amy, go watch part 4. So I did, and I was like, dang, this is good stuff. That he's doing a lecture, and he's like talking about, don't look at each individual trade as like do or die. It's let's take 20 trades, and then we can analyze like where we're at. You know, we red or green. You know, are we making the same mistakes in those 20 trades, or are we doing better? And he's like, you know, you gotta bring your position size down to where it's so stupidly small, you have no qualms whatsoever of like, I could lose all the money. So he said actually in the video, with the 20 trades, he was like, pick a dollar amount in the 20 trades that you are okay losing, even if like you lost every single of the 20 trades. And so I was like, whoa, like, okay, like we'll just take all the restrictions off and pretend, okay, what would be the number? And so when I thought about just trading like 1 share, I was like, well, I'll try a trailing stop loss of 75 cents. And that would mean if I lost all 20 trades, that's like $15. I'm like, okay, yeah, like I can handle that. Because I was losing $15 every trade sometimes. So I'm like, okay, over 20 trades, I'm cool with that. So my results were really good trading the 1 share, 20 trades. I think I did like a 70%, 71% win rate. And I was actually green at the end of that. And then when I started trading with 2 shares, I don't think it was the position size changing. I think that I just jumped back into the game too quickly, where I should have maybe taken a break, because I did that for, you know, mentally it takes a toll on you a little bit, like being at your best. And I should have just said, hey, good for me, like let's take a day or 2 off. And I jumped back in too soon, I feel like, and tried to be like, I'm going to be just as good or better, you know? And so I just started off on the wrong foot of trading 2 shares per trade. And I've done 14 of this next 20 series, and I'm like, yeah, this isn't looking too good. I'm negative. I've had way more loses than wins and losses than wins. And I'm like, we need to reset. Need to like look at, okay, what have I done differently this time? Where do I need to make some changes? And I encourage you, if you like have felt the sting this week, I think many people have, to maybe look at, am I trading too big? Or am I, potentially just opening myself up to too much risk? Because I know for me, when I wanted to try different stop loss amounts, and I did this within this 20 series the second time, it was opening me up to bigger risk. And so I'm like losing dollars per day instead of, 75 cents here and there. And I was like, let's try $1.50, let's try $1. And it was like, I should have just stuck with my official experiment, 75-cent trailing stop. Like, let's stop playing around. This isn't like, let's play with stops experiment. No, we're trading with 2 shares. Like, keep it simple, keep it structured. And to try to jump around and try different things, it just wasn't the time for that. So next week going forward, I'm still in my 2 shares per trade, and I'm going back to my trailing stop of 75 cents. That's it, period. I'm going to follow my exit rules, my 3-strike rule, using the stochastic oscillator, using the price action, and using the levels of support or resistance, where if it's trying to hit, reject 2 times, I'm cutting the trade early, if I'm not already stopped out by that point. So anyways, guys, my rambles, I hope, is helpful in some way. I know how challenging this game is now at month 4, because 1, the markets have changed. It's a different trading environment. 2, throughout my life, there's been this pattern of like, whatever I tried new, by month 4, it was like a roadblock. Like every freaking time, tried a new job, tried a new business, something like that. The month 4, for some reason, is like, okay, this is the hump, right? You get past that and you go to your next level. So I'm telling myself, like, get through month 4, keep going. Doesn't matter right now whether I end green or red for March. It's really just about like, let's get the foundation right. Let's get the trading strategy down. I feel like the fact that I did very well in my first 20 trades with this experiment was a sign that my strategy is somewhat working. Yay. But the losses I've experienced, the emotional kind of stuff, it's like, okay, we got to just keep it simple. Follow what you did before. Don't try new stuff. Stick to the game plan. Don't go outside your trading rules. So another thing was, I'm thinking of like, okay, if I have X amount of red trades in a day, like when do I walk away? Hey, Nia, thank you. Said you got this. I've kind of analyzed it from a couple different angles. I've looked at my stats and I'm like, okay, statistically, even going back before I was trading small position sizes, if I did say like 4 trades in a day, statistically, Amy ends up red on the day. And that could be a 50-50 shot too. That could be 2 green and 2 red trades in a day. But what ends up happening, I think, each time you enter a trade, you're opening yourself up to more risk, right? Like, regardless of what the outcome is going to be, each time you have to recognize, I'm at a potential for losing more money than I've already lost today, or I could lose what I've already gained today. So just keep that in mind. So I think 4 is too many. So I'm like, okay, well, if we have 3 trades, if I'm red on the first trade, I will go in the second. Okay, give myself a shot, right? If I end up red 2 times in a row, the chances of me coming back at that point, I think it's about 40% that the third one could be a green. Because I've had some days, where I did 3 or 4 trades and then that last one, or third or fourth one was green. But it's like, okay, but then you put the pressure on yourself. Like if you do 2 red losses back to back, then that third one, you're like, well, I gotta make up for the losses, right? And you then either take either I've messed up where I've taken profits too soon, I'm still red on the day, like, okay, or I overstay my welcome and the trade turns against me, you know. So it's like one of those things. So I'm thinking kind of like, okay, if I do 2 trades, 1 red, 1 green, I'll play it by ear. Like, how do I feel? Should I go for the 3rd trade, you know, get more green if I need to? If I do 2 trades, 1 in red, 1 green, and I'm up for the day, that's it. We walk. That's kind of my thing. If I do 1 trade and I'm green, I'm almost to the point of like, walk, go, just leave, right? Because again, if you open yourself up to that next trade, it's risk. You could risk losing what you just gained. If I decide, you know what, I'm okay doing a 2nd trade, I was green on the 1st trade, yay! Maybe at that point on the 2nd trade, it's like, okay, evaluate where you're going to jump out. Instead of allowing the 75-cent trailing stop to hit, if it goes against me, say, no, 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 we're going to get out early, you know, so that way I could retain some of the 1st trade's profit, if that makes sense. So these are just some scenarios I'm kind of coming up with in my head as I talk, and I'm kind of been thinking about all week. It's like, you need to have some rules for this, because I remember thinking to limit myself to a number per day of trades in general. But there's been times where I've come back doing more trades, so I didn't really like that idea. I was like, no, only going to do 2 trades a day or 3 trades a day. I didn't like that idea. It's more about where am I at mentally after the first 1 or 2. Then you decide, you know, if you went 2 for 2, get out. like you're on a good streak. You can end the day green. You can end the day in profit. You can be like, that one's going in the books, you know, like, woohoo. That's definitely like, there was a couple of days I had in the last 2 weeks where that happened. I had 2 greens. I was, you know, woohoo. And I didn't walk away. And then I had a loss. And in some cases, the loss overshot my profit for the day. And it's like, I could have walked away. And I think sometimes I just want to keep trading. And that's not a good place to be. Like, yeah, it's fun. It's exciting. I love to do it. But at the same time, I shouldn't be taking trades just because I'm bored or just because I want to keep feeling the excitement, right? You know what I mean? Like, anyways, guys, yeah, if y'all are wondering what I trade, like who's helped me learn how to trade and stuff like that, I have a link down in the description of this live, and you can see my day trading resources. I've just compiled like YouTubers, books, videos that have specifically helped me. There's been a couple of like teachers I'm like, you know, thank you for your wisdom. And I try to follow fewer rather than many people, because if you follow too many people, then it's like you got all this noise in your head because people are going to contradict each other, just how we are. We all have our individual trading styles. We all like have different markets we trade. We got different strategies, different setups. And I think once you find something that sort of clicks for you, it's like, go with that. You know, I've got friends all over the place. I seem to attract trading friends now, which is great. But they are all like, Amy, you should do futures. And I'm like, okay, great, you're having fun. Good for you. Like, if it's working, awesome. Keep at it. Me, I trade stocks and ETFs. That's just fun for me. I like businessy things. Like, I like companies, and stocks to me are more exciting than just kind of watching an index. So that's why I picked stocks and ETFs, and I've had, you know, some successes, enough so where the beginning successes kind of made me feel better, like, to stay in this. And I really just, since I got into it in December, it's been like, this is my thing. Like, I'm not playing, I'm not half doing it. No, I'm freaking like serious. Like, this is my lane. Day trading, and specifically this market, this is my lane. I'm staying in it. And Nia says, would you do a paper trade after you take your trades for the day, just to see if you would have had a gain or loss? No, I personally don't paper trade ever. And the reason being is I don't feel like I would be able to muster the same emotions that would come up in a real trade. So I rather practiced, like I did this before these experiments. I would go into Thinkorswim and I would practice with the 1 share before I made it an official, you know, thing. I would just go in there and play with the 1 share. And at the time, I think my stops were like 30 or 40 cents. So it was like, you know, to me, it's just like play money. And that helped me because it was real to me. Even though it's a very small amount of money, it was more real to play with the one share with the tiny little stop loss than it was for me to go in and paper trade. And if it works for you, great. Like if you can go in there and like test your strategies and feel like you can come out like, I know what I'm doing, then that's great. Understandable, that's how I am. Yeah. I mean, I don't, I feel like there's a lot of YouTubers, especially, who will be like, you need to be in the demo account for like 3 months. That's it, period. And that may work for people who are not very disciplined and have a tendency to overtrade, or they're buying position sizes they shouldn't be buying, or they're putting their entire account right into a trade. Like, yeah, those people probably need the bumper guards. But if you are a little more confident in your, ability to stay in safe zones, then I think by all means, like, just trade really small. If like normally you're trading 500 shares, if you want to just sort of practice as you will, just be like, okay, I'm gonna buy like 10 shares. Just keep your normal stop loss. That was the other thing, was I was like, if I'm trading smaller, I'm gonna be like, this would be my normal stop if I was trading large positions. Just because I'm trading smaller doesn't mean I should have this huge wide stop. Like, no, stick to the way you would normally trade, whether you're in the demo account or you're doing, a small position size. I just think the more real you can make the environment, the more accurate it will be for you, and the more it will help when you're in those sticky situations, like in a real trade where you're like, shoot, like, should I bail? Should I add to the position? Should I take profits here? Should I wait? When you got all those questions in your head and your emotions are running high, it's a lot harder to make a good decision. And I think if you've got those like basically, it's almost like muscle memory, right, with your hands. Like, no, I remember I traded this exact same setup before, and I saw this signal, and I sold here, and da-da. And if you got that kind of in your memory bank somewhere, subconsciously it will it'll turn on, and in the real trade you'll act according to plan. But if you have no experience, yeah, that makes it a lot harder. I just think to emulate the real world is just the best way to go. Even if it costs you a little bit of money. Like me, I'm trading with these little tiny sizes. I'm okay making losses and whatnot. It's like better that I make the losses in the small sizes than try to scale up like I really wanted to do. There was a point where I was like, I had a couple of winning trades in a week, and I'm like, let's double. I would be trading like 40, 50, 60 shares, and I'm like, let's go to 100. And then I'd have a loss. Maybe I was jumping to 75 shares, whatever. And I'd have a loss, and it was like, oh crap, that doesn't feel good, right? Because then you lost like more than you even made the whole week, and this is no fun, right? True, exactly. So, all right, guys, that's all I got for you. Catch you on the next one. Feel free to look at the channel for my other day trading videos. If you want a good laugh and a good cry, no, it's just me crying, feel free to watch my recent ones where I kind of went into detail about the trades of the week, because it's been all red. It's all red here. Feel free to feel better about your own situation by watching mine. So I'll see you guys on the next one.